Hello and good morning from Europe, March 23, Monday, at the beginning of very important week. As always, while geopolitical tensions and escalations continues in the Middle East, and this tensions of an increase, and again, the market is leading in the week ahead as well with the tensions and the geopolitical escalations that we have in the Middle East. As what happened last week, we are starting again the week that must be watched most closely by the effect of the geopolitical tensions, the speeches that we will have from the central bankers. And anyway, generally looking at today's market is very light. I mean, we don't have too much important economic data to watch to talk about that. That's why I will talk mostly today about the week ahead. However, let me tell you what generally to understand where we are. I have to mention that today is the day 24 of Iran war, where the American and Israelis they are attacking to the Islamic Republic based in Iran. And while this war continues and the market affecting by this geopolitical tensions, Donald Trump gave 48 hours time to Islamic Republic to open the Strait of Hormuz. Otherwise, they're going to attack to the structures, energy infrastructures in Iran, and that can be uh, somehow we can say that it will be it will be very dangerous if it happens, let's say in this way. One, because Iranian on the other side, they also treating that if they attack to the energy bases in Iran, they're going to do the same with the bases that they have. I mean, generally the Arab countries across the Persian Gulf, especially in Israel as well. And these if that happen and if we can see this repeat from both sides, it can increase again the tension, it can increase the energy crisis that we have right now, which is not going to end somewhere good. However, Mr. Trump mentioned that that this is the nice way to reach the peace by increasing the we can say those like let me find the exact message that he had. He said that peace through the strength, to put it uh, mildly. So this meaning that if we want to get to I mean if better to say this treatment that he had for this 48-hour streets, he says that this is a nice way to reach the peace, if we want to say it in a nice way, to receive and get the peace with the strength and more power that we have. Anyway, these tensions and especially this geopolitical tensions continues. Looking at the last week, we started with the effect again with these tensions. However, at the very beginning of the previous week, on the Monday, market got a little bit more positive after 2 weeks of falling down. So on the Monday, market was somehow rebounding. On Tuesday, cautious came before the Federal Reserve and the central bank meetings. We know that the last week we had it was a central banks week. Is it unlike central bank meeting in Australia, which increased the rates by 25 basis point, and Brazil, BCB, which cut the rates by 25 basis point instead of 50 expectations. Other central banks, they hold the rates, in United States, European, Eurozone, Bank of England, Bank of Japan, Swiss National Bank, and many other economies, Central Bank of Turkey, they all hold the interest rates at the levels that they had. As the inflation risk right now is changing the market tone. So Tuesday and before central banks starts, actually, we can say in this way because Wednesday and Thursday and Friday again starting from Tuesday, the central banks started their meeting. So on Tuesday before Friday's Fed announcement, BOC, Bank of Canada announcement and Fed announcement, the market got a little bit cautious, started losing the stream again. On Wednesday, Federal Reserve hold the rates. Mr. Powell kept the market uneasy as he said that, okay, we have to be a little bit more cautious about the inflation, and it's still so soon to talk about that. So we have to wait a little bit more to understand how this inflation risk, how this war risk can affect the market and inflation. And Thursday, four central banks they hold their rates, including European Central Bank, Bank of England, and then we had the Japanese Central Bank and the China Central Bank. In that 24 hours from Thursday to Friday, we had four central banks that they hold the interest rates unchanged. And Friday, the market was somehow the risk off came to the market slightly. We had a condition that I can say it was worse, or I can say it was I mean, but better. Generally, market even with the risk of situation, market traded much more cautiously. Generally, the market during the previous week, Nasdaq, if we want to say on a monthly basis, on a weekly basis, S&P 500 increase on Monday, but generally, if you look at the whole week, we can say S&P 500, Nasdaq, and Dow Jones, all of them they closed lower. I mean, all of them they closed lower. This is while 10-year Treasury bonds, which ended the last week at 4.27%, started this week at very much higher levels at 4.43 or 42 right now. This week, 4.42%. Generally, we can say, as we can understand here, that the market risk is so high, and that's very visible, very close, we can say clearly can be seen in the interest rate that we have, in interest rate decisions that we had last week, in the rates and yields that we have currently in the market. Risk of situation, the market risk situation, this is the what leading the market, and geopolitical risk generally can, this is something that can lead the market. In the week ahead, what we can expect for the week ahead, the oil and the war in the Persian Gulf is the main market mover. This is not it's not something we can adopt on that. Other important data is the PMI numbers. The PMIs, since the PMI numbers that we will have through the week ahead are mostly about the March, and just like the flash number for the March, and is for the period that the war started, we can take it more seriously. But however, generally we are expecting to see the weaker number for both manufacturing and service sector. In S&P Global, probably the numbers that S&P Global will give for the manufacturing and service PMIs for most developing economies that we're going to have during the week, they're going to be weaker. During the week, we will have the inflation numbers as well. The inflation numbers, especially from Japan, UK, Australia, Spain, and European economies. We will have the numbers, but these inflation numbers, they're going to cover the last month, for the February, for the period that war didn't start yet. That's why somehow we can say those numbers will be delayed numbers, and market can somehow ignore them. That's what we can say for the for the inflation numbers. That's why I don't think that the inflation numbers that during the week will be out will be the numbers. Those will be the numbers that market can look them more closely. In United States, the most important numbers, as mentioned, we will have this PMI numbers, and also we will have the housing numbers, new home sales and numbers about the housing market. Generally, we're expecting to see the housing market to remain weak, and in line with other data, put more pressure on the generally stock market in United States. But again, the market will be led by geopolitical tensions, and how this escalation ends, or how this escalation continues in the Middle East. Looking at these numbers, an effect of these numbers, if you look at the CME Group FedWatch tools, you can see for the April, for the next meeting of Federal Reserve, Now we have more than 12% chance for a 25 basis point rate cut. This is not something that we had just like 2 weeks ago, 3 weeks ago before war started. Even we didn't have any idea about that. The market was talking about the 42% of rates holding the rate, 45% of the rate cut, 25 basis point, and also we had 3%, about 3% chance, 3-4% chance for 25 basis for 50 basis point rate hike. So this now, for 50 basis point rate cuts, and now we have the 25 basis point rate hike possible or chance for more than 12%. And it's interesting if you look at the June meeting, the expectations, even there is a more about 3% expectation of 50 basis point rate cut, and 25 basis point rate cut expectation is increased to 28%, while we have only 60, almost 68, 67%, 68, 69% almost chance for holding the current rate. Even not, there is no chance at all for the rate cut, while it was more than 45%, while we have more than 45% chance for that. I mean, we had more than 50% chance for 25 basis point rate cuts. Now there is not just we don't have any chance for the rate cut in the first quarter, in the first half of the year, even we have chance for 50 basis point rate hike. Yeah, it's not very unlikely, but what we can see here that there is a chance for that, and that can tell us how market is cautious and how market is worried about the condition and the ongoing geopolitical tensions. That's why you can see the market risk at 26.78, while just like after increasing towards 30 last week, we saw this market risk around 24, but now again it's around 27. Gold price, looking at the market risk, normally we should see the gold price higher. However, with the rates strongly increasing in the rates with 4.42% and stronger US dollar, when you can see the US dollar index around almost 100 again, and the market expecting to see the 100 once more, while it was be touched last week as well. That's why we can see the pressure on the gold. But still, I don't see that it's a long run way, and most probably we can see some correction in the next days. On the other hand, the oil, again, with the treat that we had during the weekend and the ongoing escalations, again, the oil price is increasing. And now we can see WTI around almost $99, while there is a crude oil is more than 110. Brent oil actually is more than $110. The Asian market continued this downtrend with more aggressive tone. We can see the Nikkei is losing almost 3.4%, Hang Seng 3.8%, Shanghai 3.2%. Same downward we can see in India, Singapore, and South Korea. The US futures also continuing the downtrend that they had, and you can see the Dow Jones, S&P 500, Nasdaq, all of them, they are losing by 0.4, 0.5, and 0.6% respectively, while in the cryptocurrency market also situation is not so good. Yeah, in a daily basis we can see Bitcoin is slightly increased towards $68,700, but during the weekend, from the $70,000, it fell down under $68,000, and that's why we can say that generally the cryptocurrency market also in the bigger picture is still slight movement with the downward tendency. Generally, the market is in a downward, in the lowering down, with the increasing the tensions and geopolitical risk in the market. Looking at the rates once again and telling that the US 10 years bond yields reached to 4.42%, while in Japan, after falling towards 2.15%, now we can see again that 2.23, 2.31%. The same increasing in the yields we can see in Germany, Italy, Spain, UK, and all other economies. The trend is the same. The yields increasing. This the premium of the risk in the market. That's why we can see the currency, especially safe assets, safe haven currencies, especially the United States dollar, is increasing and put the pressure on the gold and silver prices. That's generally what's happening in the market and what's happening and what's our expectation for today and later this week. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye-bye.